We're joined now by Jeff Klingelhofer. He is the co-head of investments and a portfolio manager at Thornburg Investment Management. Jeff, thanks for joining us once again. So let's just kind of, lay out where your head is at, given what we've seen in the markets over the last 6 weeks, which is this sharp divide. And maybe it's not as big a divide as it might seem to some of us between how the stock market has done and what we're seeing on the ground in the real economy.
No, you're absolutely right. I think many investors have been caught off guard by the sharp snapback, largely fueled by the Fed itself. But it's not just a divide between Main Street and Wall Street. It's also a divide within stocks themselves, right? You have many of the tech companies that sit at all-time highs, while other portions of the economy sit near lows, right? So it's been a divide within markets, but a divide between Wall Street and Main Street as well.
So let's talk a little bit about the Fed then. Last night we heard from Chair Jay Powell, and I think the market likes his commentary in terms of the Fed not being out of ammunition. There's more programs they can use. He did a modern version of the Bernanke line, right? He said we just digitally create the money. And I think as someone who watches the Fed, when he says that on 60 Minutes, it really matters because most Americans don't think about it this way. What do you make of not only Powell's comments in the last week or so, but just what the Fed has done, where they've gotten to, and how quickly we've gotten to this point in the monetary policy cycle?
It's been shocking, right? I mean, I think if you rewind the clock, the Fed is scared. The Fed is very, very scared for what's going on in the underlying real economy. When you look where they were kind of hitting on one of their two objectives, from an employment objective, they were clearly there. We were sitting with a 3 handle on unemployment. Today, that number is notably higher and continue to rise north. There's inflation potential, but certainly no inflation challenges in the near term, and a decade plus of undershooting inflation. So the Fed has thrown everything they can to try and continue to get this economy kickstarted. And thus far, they can lend, but they cannot spend. So they are continuing to bump up against the same challenges that they have for the last decade, where to the earlier question, it continues to support Wall Street, continues to support financial assets, but isn't necessarily making its way to the real economy.
I want to ask you, you talked a little bit about equities and the bifurcation that we're seeing with the economy. I want to talk about fixed income, which you say is making money for your clients. Before coronavirus, we had a number of people that were coming on with talking about munis in particular, right? As we've seen what's happening with taxes in a lot of different blue states. How are you thinking of that now, given all of the state issues that we have and how much these deficits have run up? Is that still a part of the fixed income strategy?
They absolutely are. And the Fed is working to support all asset classes, including municipals themselves, right? So we've seen a number of iterations of the Fed program to directly support municipalities and smaller municipalities as they came under pressure. But it's the same as every other financial market right now. It's the name of the game is don't fight the Fed. The Fed will continue to prop up local economies much as it's supporting and propping up debt-laden companies. And so the question becomes not what the Fed is doing today, but ultimately when the economy does begin to kickstart, when we get beyond COVID-19 and into the thick of the election cycle, perhaps where are taxes going and what's the Fed do to step back? That's really where I perceive the challenges to be and where the Fed is likely going to have a very difficult time extricating itself from the market. You're likely to see additional stimulus measures, maybe yield curve control, or perhaps even negative rates as they struggle to keep the minimal economic momentum that they've managed to spur at that point ongoing.
Yeah, and I think, Jeff, there's certainly a fear, and you can see it in Powell's commentary, that he'll be left alone, that Congress will stop doing anything, and then it's just him out there with, frankly, inadequate tools for what that would call for. But let's move on and talk a little bit about how you're positioned right now, what you're seeing, what you like in this market. Did you feel compelled to make a lot of moves in March and April, or was it sort of a, don't just do something, sit there kind of attitude for you?
No, quite the contrary. Absolutely. We made a lot of moves. It was a really fun time in markets. One of the benefits is, as we'd spoken in the past, and fixed income investors, you're never fully compensated for the risks that are out there. And while we certainly didn't see COVID-19 in the weeks to come, we did see many other risks on the horizon, combined with very low spreads, very low yields. And that meant we were very defensively postured. So that worked to our advantage going into this, where we could be providers of liquidity to the market. We were extremely active in markets, and that is ultimately what has benefited our shareholders of funds. From here forward, now that the Fed has come in and intervened so strongly, we're taking a bit more of a defensive posture. We're not outright de-risking the portfolios, but it's much more of a swap game. So it's buying something and selling something else, keeping us about in a stasis and waiting to see where the next move comes from.
All right, Jeff Klingelhofer with Thornburg Investment Management. Always good to get your thoughts. Appreciate you joining the show today. We'll talk soon.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.